Welcome to the model of ninth wave. Superior inventions for financial markets using 369 forecasting research and development.
Hello friends, welcome back. Today we are discussing the trend basics again based on what we think the good trend definition is. So let's revisit potential trading model and let's start with the trend. And today we are picking up soybeans 30-minute chart. So the trend definition is pretty clear. We have a current VWAP which is shown in this color in the lowest frame, and we have three moving averages of that VWAP. One is 160 period moving average. You can use SMA or EMA. The other one is 200 period moving average, and then the yellow one is 30 period moving average. So 200 red, white is 160, yellow is 30 period moving average of VWAP. So idea is pretty simple. If the VWAP is below 30, it's an early sign of downtrend. If it is just move crossed above 30, is an early sign of uptrend. So here is it moved above the yellow, here it moved below the yellow, and here yellow itself moved below the other moving averages. So here yellow means 30 moving average of VWAP moved below 160 and 200 moving average of VWAP. So this is defining the uptrend is here, downtrend is here. You have to come with some technically correct approach to trending, which is not going to change as new fads arrive in the market. Right, so downtrend. Now this is intermediate. Even though everything is below 160 and 200, this is intermediate pullback. This is also intermediate pullback. The VWAP went above, the 30 EMA, right, temporarily. So this is how we settled on the trend. Second part is we talked about having some strong oscillator to support your trending agenda. So you may decide I will just I'm a long-term trader. I'll hold position for a few days, or I use options or some ETFs. Then this is good enough that you deal just with yellow, and which is 30 period EMA of VWAP. And as it goes above and below 200, 160 EMA or SMA of VWAP, that defines your trend, and you hold it for a long time. And that is a nice, profitable opportunity. Now, as the trend develops, you want to trade something else as well in the direction of the trend. This is where the oscillator, when the bigger trend is down, when the oscillator pulls up, short here, right? Short here, all the overboughts are going to be shorted. We don't even have to look at the price. We can just look at the oscillator first. So looking at this trend, let me just mark where the potential shorts are. These are also shorts based on the oscillator rule. When the moving average is extremely pinned to the low side, any pullbacks to this level is a short, because the pressure is so low that is strongly on the lower side, which means the oscillator will not be able to pull back all the way to overbought. It's like here also, right? It went down extremely low, pull back to this level is all you will get. You will not be able to see it is pulling back. So, but that only happens when you have this what we call as extreme pressure condition. All right, this is all typical. Areas of short as well. And why we can trust this is because market is strongly trending down as per the trend definition we have come with. And then again it reset itself. The trend got reset. It went up for a while, few days, or for a day, and then reset. So there are a bunch of reset conditions as well. Now when they both, now this is a good trend because it confirmed, reset itself down, fresh trend downward started, pullback, short. Fresh trend. So when oscillator goes temporarily, this VWAP goes temporarily above 200 and comes down, that's a great reset. But I think because this is the reason we use 30 is telling us the trend is still down, even though we have some minor pullbacks on the VWAP, and that's what oscillator is also telling us. All right, so we marked two things, trend and trying to get inside the trade log based on our trend location, and there we are. So now we have blue levels where we are. Now we have the intention based on the yellow below all this, right? So this is all downtrend. I'm not going to talk about it anymore. So we are in downtrend. Now pullback has also happened, right? So now it makes sense when we say go long and short at these levels, we short at the below level, we short at the below level. We keep on shorting. Again, this is blue level. This was short again here as well. As I plot these levels, this is also pull back to the previous level, short again. Right, so it is trying to pull back again, going to our blue lines. It loves these areas. That's again short. Now you can see how we are able to identify the location. You may get stopped out once in a while, which is okay, but you can see now we are trading very effectively by putting all these things together. Now this is obviously a loss. It didn't like this. So what we are doing now, market was here, opened at this level. Right, so this is where I said earlier in other videos, let the oscillator go on the other side. There's no point shorting when market is shown through this oscillator lens to be oversold. Let it go all to the top side, and where it goes to our blue line. See that? So I hope you can see, mark these levels and take advantage of it. Same thing happened here. right? We want to still go short. Right here, short little bit and short little bit. Yes, it's not about getting stopped out once in a while. It is about trading as a net winner for the day. Tighter the stop loss, more stop out is expected. So if you have 1 point, 2 point, or a very small stop loss, expect some few tries to catch 1 to 5, 1 to 10. Now yellow is moving up, trend is moving up. Trend already temporarily moved against the bigger time frame. Now the yellow, everything is moving on the top side, so it may go down and pull back up, or can just go up from here based on what it looks like. If you want to go long, let this guy, or this could be jam 44, come down here. It will love to retest one of these blue areas. As you can see, it always goes to the blue areas, Now this was a cluster of blue areas. If you can see this, if you're tracking those things and valuing what I'm giving, hopefully you can take advantage of it. Now this is soybean. Now this is why it is called a simple startup methodology, because you know your trend, you know your pullbacks, you know your direction, you know your entry levels, you know your stop losses. It's all right here. Thank you.